Can start. Mukul? Mukul?
So in a minute we will begin the session.
Mukul, we can start. Mukul? Can you hear me?
Good morning, dear members of this webinar. On behalf of Karnataka State Chartered Accountants Association, I, CA Mukul Shringeri, member of the Indirect Tax Committee of KSCAA, welcome you all to this webinar on the topic Different Assessments under GST Law. I welcome Advocate Chartered Accountant A. Saiprasad, who is the expert speaker of this webinar. KSCAA has created a professional development fund during the initial days to conduct professional developmental activities. Many of the senior chartered accountants have contributed towards the professional developmental fund. Today's webinar program is in the name of CA B.S. Ravi Kumar. Attendees are requested to raise their questions in the question and answer tab available. The question shall be presented to the speaker at the end of the session for his views. Participants are requested to ask questions by selecting the drop-down option All Panelists. Kindly select the option All Panelists. Now I provide an introduction of today's speaker, Advocate CA A. Saiprasad. Mr. Saiprasad is a practicing advocate. He is a commerce graduate, pursued his chartered accountancy course under Sri B.P. Rao Chartered Accountant, who is the past president of ICAI. He qualified as a chartered accountant in the year 2006. He qualified as an advocate in the year 2009. While working under his senior Sri K.S. Ravi Shankar, he started his independent practice in the year 2012. He represents trade and industry before departmental authorities, judicial forums of SESTAT, Revisionary Authority, and High Court of Karnataka. Sai Prasad has also pursued and completed his post-qualification courses in Diploma in Systems Audit (DISA) from ICAI and Computer Information System Audit (CISA) from ISACA, USA. He was a part of Research Committee GST Subgroup SIRC of ICAI dealing with suggesting transitional provisions of GST. Now I hand over the proceedings to our speaker, Advocate C.S. Saiprasad. Welcome, sir.
At the outset, I thank the Karnataka Chartered Accountants Association for having extended this invitation and creating this space and time for all of us to meet virtually and discuss about a few provisions of GST law. My respects to the elder members in the profession and a warm welcome to all my brother and sister members. Is my voice coming through properly?
Yes, sir.
Okay. Okay. Is the slide, has the slide come through?
Yes. Yes.
Right. Before I start, uh, I need to thank the chairman of the Inner Tax Committee of KCA. I also need to thank the president of KCA, Sri Chandrasekhar sir. Thank you. Thanks to both of you. Having done with the formalities, let's directly get into the different types of assessments under the GST law. It is from the source for these kinds of provisions. Article 265 of the Constitution of India states that no tax shall be collected except by authority of law. No tax shall be levied or collected except by authority of law. So therefore, the authority of law is required not only to levy, but also to collect. The levy is on supply. 4 ingredients, suffice to say that there are 4 ingredients that is necessary for a supply, that is provided under section 9, which is the charging section. What we are trying to go and understand today is part of machinery provisions. Under machinery provisions, determining of tax liability would also be a part of these machinery provisions. That is what we're going to try and understand today. The third part of the fiscal statute will be the demand and recovery provisions. So levy and demand and recovery we are not touching. And the machinery provisions, we are restricting ourselves to the provisions relating to assessment. Before I proceed further, suffice to state that there is a difference between assessment and adjudication. Assessment is determination of liability, generally by the assessee himself in the case of indirect tax laws. Adjudication is a case or is a process where the tax authorities are not happy about the way the assessment have been done, where the tax authorities feel that taxes have been short levied or not levied, or refunds have been wrongly claimed, or where input tax credits have been wrongly availed or utilized, or where money has been collected as taxes, or where taxes have been collected but not remitted to the government exchequer, or where the proceedings, where there is a contravention of the provisions of the Act, such as transportation of goods, the provisions are not followed, then again you penalties and levies. Or wherever there is a contravention of provision of the Act, then under 122, 123, 124, 125, confiscation under 130. So these are all the cases which are dealing with adjudication, wherein the tax officer assessee to notice as to why tax ought not to have been paid, and then also demands interest and penalty. Time is provided to the assessee to make a written reply, also to enter appearance. After considering the replies of the assessee, a final assessment order is passed confirming a demand, which results in crystallized liability. That is adjudication procedure or process. That is not what we are going to deal with today. We are going to deal with the process prior to the adjudication as assessment processes. Let us look at the meaning of assessment. Section 2, subsection 11 of the GST law defines assessment as assessment means determination of tax liability, and then goes on to expand the definition by stating and includes the inclusive portion. It says and includes self-assessment, reassessment, provisional assessment, summary assessment, and best judgment assessment. So let's try and analyze the first portion of the definition of assessment. Assessment means determination of tax liability. The general understanding is the determination of tax liability, when it is done by the assessee, would fall under self-assessment, where the determination of tax liability or the prior to determination of tax liability is undertaken by the revenue authorities, then it could fall under scrutiny assessment or summary assessment or best judgment assessments. And what is the meaning of determination of tax liability? Starting right from the fact as to whether I need to register, that is, what is my aggregate turnover, whether my aggregate turnover has crossed 20 lakh rupees. If it has crossed 20 lakh rupees, then what is the place from where I am making the supply? Alternatively, whether I am liable for compulsory registration under section 24, where I don't have to look at the threshold limit of 20 lakhs, but I am required to register from rupee 1 because of 24. After determining my registrations, whether the transaction that is happening supply or not, whether it is falling within the meaning of section 7, is it in the form of sale, transfer, barter, exchange, lease, license, rental, disposal? If it is not falling under all these 7 or 8 categories, is it falling under any other residual category? Whether that residual category is in the nature of supply or not. Take, for example, succession, partitions, whether these are in the natures of supply, after, whether they are in the nature of supply, whether the attendant conditions of consideration and the course of furtherance of business is satisfied. Determining consideration where it is not apparent on the face of the record. Determining considerations where it is in non-monetary form. especially determining consideration where it is an act of abstinence. For example, negative briefs. For example, non-agreements. Determination of consideration where not recorded in books of accounts, because books of accounts go only on the basis of money measurement concept. Determining these all kinds of considerations, thereafter determining whether it's in the course of furtherance of business, getting into the definition of business, whether charitable and religious activities are also business, paying attention to the definition of charitable activities under 12/17, whether the supply is being made at transaction value, whether the price is the sole consideration. If price is not the sole consideration, then what are the other considerations being received? Whether it is between related parties. If it is not between related parties, whether it is between distinct persons, section 25(4) and 25(5), whether it is between a principal and an agent, whether the transactions are in the nature of a pure agent, whether deemed values have been given for the transactions, what is the time of supply, whether the tax needs to be paid as soon as I receive the advance, whether there are any exemptions for receipt of advances, that is for goods, what could be the time of supply in case of foreign exchange transactions. After determining the time of supply, whether it's continuous supply, time of supply for, that is interest penalty receipt for delay in consideration, receipt of consideration. What about time of supply on basis? What about time of supply in case of rejected basis? Are there any differences for this? What about time of supply in case where there is a non-provision of service where advance is received? Or there is a, what about it when there is a deficiency in provision of service? What about the place of supply? Interstate supply, intrastate supply, cross-border transactions, whether all the conditions of export of service are satisfied. Finally, who is the person liable to pay the tax? Whether the supplier is liable to pay, the recipient is liable to pay, a third party who has a nexus to the transaction is the person liable to pay. All these things, which I told to all of you for say about 5 minutes, would fall within the meaning of determination of tax liability. It would not be wrong if I told you that we must be aware of all the provisions of GST law, apply all the provisions of GST law properly, and then determine the tax liability. In fact, I forgot a very important part of input tax credit all. Conditions of taking credit, conditions of reversing credit under 17. So even all those things forms part of determination of tax liability. This is the first part or the first portion of definition of assessment, determination of tax liability. Of tax liability is required to be made by the assessee himself under the GST law. When it is made by the assessee himself, then it is called as self-assessment. There is one attendant condition applied to this, which is the conjunction. I'll tell you what that is when I get into self-assessment. In the case of scrutiny assessment, in the case of summary assessments, this determination of tax liability is being made by the departmental officials. In case of provisional assessment, the assessee, raises his hands and says, I am not able to determine my tax liability. I don't know what is the rate of tax to apply. I'm not sure about the value that I have to pay tax on. And so therefore goes into provisional assessment. And there a final assessment is being made again by the departmental official. And finally, best judgment assessments is cases where there is a failure or an omission on the part of the assessee to determine the tax liability, and hence the tax officer or the proper officer determines the tax liability of the assessee and what is the attendant consequences where we let the tax officer determine the tax liability for us of some deliberations. Okay, let's get into self-assessments. Now, I'll just take you to the provision. It says every registered person shall self-assess the tax payable under this act. That is what I just told you, determination of tax liability. It doesn't stop there. Self-assessment doesn't stop there. After determining the tax liability, there is a conjunction. The conjunction is and it says, after determining the tax liability, such registered person must furnish a return. And that is, he must have filed the return. Furnish a return for each tax period as specified under section 39. The specification under section 39 is for the normal taxpayer is your Gstr 3B. So self-assessment is determination of tax liability plus furnishing of the tax of the return. Furnishing of the tax return will by consequence include payment of the taxes as determined by the assessee in full. Okay, let's proceed further. Self-assessment just completed. Who is required to self-assess? Every registered person is required to self-assess. If you look at the definition of registered person, there is one exclusion. The exclusion is your unique identification number. Basically, all the UN organizations and the foreign consulates are provided this unique identification number. So they are not registered persons. So therefore, they are not required to make any tax liability, assessment of tax liability because of the Vienna Convention, which states that the taxes cannot be paid on the UN organizations and also the foreign consulates of the other countries. Self-assess, I've told you how you would self-assess, starting from registration till the payment of taxes, determination of interest, determination also of penalty in certain cases is the determination of tax liability. We'll go to the next question. Would return be treated as valid if self-assessed tax is not paid? Dear members, there is something called as a valid return, which is defined, wherein it says valid return means a return wherein the tax liability has been paid in full. So where the tax liability has not been paid, or in our case has not been set off, and the full self-assessed tax has not been paid, in those cases you would not have filed a valid return. Question of filing return itself will not arise because the set-off has not happened. What are the consequences of such non-payment? Well, the consequences of such non-payment is that there is a direct recovery provision as far as the assessee is concerned. The more important consequence is for the vendors of such an assessee, because they will not be able to claim the input tax credit because of contravention of 16 subsection clause C, which requires the vendor to have paid the taxes so that their customers can claim the credit. If I have not made a valid return, which means I have not paid the taxes, if I have not paid my taxes, my customers will not be able to take the credit. The next question is a rather pertinent question. This was one of the issues which did not go down well with Raghuraman sir, which was just the last session which was happening. He also wanted to mention about this. The question was, is SCN required to be issued to demand self-assessed tax and interest thereon? I have determined my tax liability in my return, but in COVID situation, I am facing a working capital problem, and hence I don't have the money to pay the taxes. So in such a case, the question is, should the department issue a show cause notice to me and follow the adjudication procedure under 73 and 74, and thereafter initiate the recovery proceedings under section 79, or can the department short circuit this entire adjudication proceedings and directly land and initiate recovery proceedings is the question. Well, the answer is given in the 75 subsection 12, which states that in case of self-assessed tax liability which has not been paid, no question of issuing a show cause notice following the adjudication proceedings, recovery proceedings to the extent that been self-assessed but not been paid. It was the specific point which Raghuraman sir had a grouse in just the previous webinar that happened, wherein Raghuraman sir was saying that you could not directly get into the recovery provisions without following the adjudication procedures. I'm in agreement with what Raghuraman sir said. Sir is much more senior. 100% what he says would be the correct point. But there's just one point that I want to make. A notice is issued to put the assessee or to show cause to the asking the assessee to cause why the tax specified in the notice should not be demanded from him. When the assessee has himself declared that there is a tax liability and he has not paid such a tax liability, then would not the process of issuing a show cause notice be redundant, because the assessee has himself admitted the tax liability but has not paid it? Yes, cases where the assessee has wrongly admitted the tax liability but not paid, he can definitely revise that GSTR 3B where he has wrongly declared and not paid. So therefore, he would not have filed. Because he would not have filed, he can definitely revise it and make the 3B proper. But where the 3B is proper and he is liable to pay tax, then I'm not aware why a recovery proceeding, what is wrong in getting into recovery proceedings, because I have myself admitted that tax. The only question before getting into recovery proceedings in case, as distinguished between the I think the other High Court decision was in N.V. Ramana's case in the Andhra Pradesh High Court. Even before determining the tax liability, they said that you can go and make a recovery proceedings. You can get into the prosecution stage also. But the other high courts held that no, before you get into prosecution, there must be a non-payment of tax. There must be a evasion of taxes paid. The evasion of taxes must be quantified. For quantification, there must be an adjudication procedure. Therefore, for adjudication procedure, there must be a notice. So without all this happening, if you directly get into prosecution or you directly get into recovery, it may be incorrect. To that extent, it is valid. It's a very good point that they're making. But where the assessee has himself self-assessed but has not paid it, I think it's a straightforward open and shut case. Not so provision for provisional attachment. You may want to look at that particular provision. Not relevant to this session, so I move further. Next, Can penalty be levied for self-assessed tax declared but not paid? We will have to look at two provisions for this. Under section 122 subclause 3 and subclause 4, it says that where taxes have been paid but not remitted to the exchequer within 3 months from the due date of payment of such tax, then the penalty can be imposed. That's under clause 3. Clause 4 is where money have been collected representing it as taxes, and such collection of money has not been paid to government, then you can collect it under clause 4. Of course, again, if it has not been paid within 3 months from due date, that is basically a section 76 case. The only point is no penalties can be imposed under section 122 without issue of a show cause notice. That is point number 1. Point number 2, where the penalties are leviable under section 122 and 74, the provision says the penalties under 73 and 74 will stand, and a corresponding penalty or double penalty again under 122 will not be imposed. That is point number 1. As far as levy of penalty under section 73 is concerned for self-assessed taxes, there is a provision which states that if the taxes are paid along with interest before issue of show cause notice, then the penalty is not payable. So therefore, penalty becomes payable for self-assessed tax in the circumstance only when first a show cause notice ought to have been issued. After the show cause notice has been issued, the tax and interest has not been paid before the issue of such notice, or the tax and interest has not been paid within 30 days from the issue of such show cause notice, then the penalty is payable under 73. And if it is a self-assessed tax, the notice itself is not liable to be issued. So this is as far as self-assessment is concerned. Now we will proceed to the next point. We will get into reassessment. Dear members, if you look at the definition of assessment, it says assessment includes self-assessment, reassessment. If you look at chapter 12 of the, I think it's chapter 12 of the CGST Act, which deals with assessment, section 59 deals with self-assessment, section 60 deals with provisional assessment, 61 deals with scrutiny, 62 deals with non-filers, 63 deals with best judgment of people who have not registered, 64 deals with summary assessment. The assessment chapter under section 12 is under chapter 12 of CGST Act is over. So therefore, definition of assessment includes. Actually, look at the provisions. There is no provision with the heading reassessment. But I would like to draw your attention to section 61, which is scrutiny assessment. We'll have a look at scrutiny assessment 61 in a minute. But I'll take you through the provision 61 and then let's have a look at reassessment. I'm sorry. Yes, scrutiny of returns. Let's look at the provision. It says the proper officer. I think I need to pause here and 2 minutes on this proper officer. Proper officer has been defined under the GST law. All of us start paying attention only from section 7. It would be good if you also have a look at section 5 and section 6 of the GST law. There was a bit of litigation on this aspect because the proper officer is as defined by the as stated by the commissioner of the GST or as stated by the board. And what had to happen was the central government had to issue a notification saying what are the proper officers for different sections. So there is a proper officer for scrutiny, there is a proper officer provisional assessment, and for summary assessment. Similarly, there are proper officers for your 73, 74, 75, 76, and similarly proper officer for your confiscation, those provisions. What happened was the central government had to notify this by way of a notification, but what happened was a circular was issued. So therefore, the assessees went in a writ petition before the High Court, saying that the procedure for notifying the proper officer was incorrect. That is, the government had to notify it by way of a notification, but the government has actually issued a circular. The High Court looked at this point and then said, fair enough, but it is only as long as the power is there with the central government, and the central government has issued the circular, and then the corrigendum was issued. So therefore, the High Court said, fair enough, the mistake that was there by way of issue of circular has been rectified, and the High Court did not finally accede to the submission made by the petitioners that it was wrongly notified by way of a circular, agreed to the said it has been corrected by way of a corrigendum, and so therefore proceeded further saying that the officers were properly notified. So you have a circular which has got a corrigendum wherein this has been the officers as to which officer can do what. That is the aspect of jurisdiction. The aspect of jurisdiction, that is which officer can do what is his scope of authority, what is it that he can specifically do, is important, because where you are able to demonstrate that a particular officer who has done a particular assessment, or a particular officer who has issued a show cause notice, or a particular officer who has confiscated goods did not have the inherent authority to do such acts, then such act becomes illegal, ultra vires the provision, because he does not have the authority to do such acts, and so therefore the entire notices or the entire assessments are set aside on the ground of jurisdiction. This is a very important ground which councils generally look at when they go in a writ petition. Notwithstanding that, it is important to be taken at the time of reply to show cause notices, reply to scrutiny of returns also, because I think you have a section, I think it is 160 of the GST law, which says that if you do not raise points of jurisdiction at the very first instance, that is, you have replied to a show cause notice, you have acted upon a notice, you have done something on the basis of intimation given by the department. Thereafter, you have found out that that particular officer did not have the authority to issue notice, or did not have the authority to scrutinize the returns, or did not have the authority to seize the goods or confiscate the goods, or issue pass the orders. You cannot bring out the absence of jurisdiction at a later point in time. The absence of jurisdiction has to be brought out at the very first interaction with the department, and if it has not been brought out and it has been acted upon, then you cannot later go back on the aspect of jurisdiction. So kindly bear this in mind. Important that our members bear this in mind, so that even we find this mistake at a later point in time, we may not be able to rely on this point when we are, interacting with the department. So much on proper officer. The proper officer may scrutinize the return and related particulars furnished by the registered person. I'll stop here. The scope and ambit of the proper officer under section 61 is to scrutinize returns and related particulars furnished by the registered persons. As a corollary, can the proper officer scrutinize and issue notices under section 61 based on the returns and related particulars which have not been furnished by the registered person? For example, GSTR 3B is a return which has been furnished by the assessee. The proper officer can scrutinize it and then issue a notice on the basis of that scrutiny of that return. But let's take the example of the scrutiny of GSTR 2A and GSTR 3B, that is the credits availed, wherein the GSTR 3B credits availed are generally higher compared to 2A because the vendors would have not uploaded their invoice. The pertinent question is whether 2A is a return which is uploaded by the registered person. No. 2A is a statement which is collated by the GST network on the basis of the various GST uploaded by all the vendors. GSTR 2A could have been amended by the registered person and GSTR 2 would have been uploaded by the registered person. The credit as per GSTR 2 and the credit availed as per GSTR 3B could have definitely been scrutinized. But credit as per GSTR 2A and 3B can be scrutinized because 2A is, and so therefore could a discrepancy be brought out from 2A and 3B is the question. While our institute in the background material says that it is a valid scrutiny, experts have done it, all my seniors have done it, so there must be some truth to what they are saying there, but you can make a scrutiny assessment of input tax credit of GSTR 3B and 2A. Of course, my seniors have done it. I may have missed out some point which they have got it, but this is what I am of the view. If I am able to find out further information on this, then I may probably change it, but this is the view that I hold as of date. Okay, let's proceed further. The proper officer may scrutinize the return related particulars furnished by a registered person. Look at the next portion. To verify the correctness of the return. So, what is the ambit of the scrutiny that the proper officer can make under 61? It is restricted only to verify the correctness of the return. The proper officer cannot get into an investigation of the affairs of the assessee under 61. If he wants to get into the audit or investigation by having a look at the Form 26AS of the assessee, income tax returns of the assessee, financial statements of the assessee, tax audit reports of the assessee, reports of the assessee, whatever is the other documents which the assessee files, and all these documents are not coming within the scope and ambit of returns furnished by the assessee, and hence the proper officer cannot get into a fishing expedition with respect to the information available in all those documents. The scope that is provided to the proper officer under 61 is limited, may I say very, very restricted, to verify the correctness of the return. You may also look at the of the return. So it has got to do more or less with this arithmetic aspect of the GSTR 3B that is there. Say for example, this is again something which I read from the background material and that I'm sharing from you. Say I have is an assessee who is liable to pay tax at the rate of 5% without taking input tax credit. In these cases, if the assessee has paid the tax at the rate of 5%, but has also taken input tax credit, then there is a proper verification of the GSTR 3B, because say this is a service with a rent cab service which is at the rate of 5% without ITC. I have paid tax on rent a cab operator, but I have also taken ITC. Then, yeah, there seems to be some apparent mistake. So kindly pay attention to the ambit of verifying the correctness of the return, and kindly make up your mind. And let us proceed further. And so he will verify the correctness of the return and inform him of discrepancies noted, if any, in such manner as may be prescribed. The manner prescribed for giving this discrepancy is in the form of ASMT 10, form ASMT 10, wherein he is going to find out the discrepancy from the return and he is going to give the discrepancy. The rules state that wherever it is possible for the proper officer, he must also quantify the taxes, interest payable or the penalty payable because of such discrepancies. This is subsection 1. Subsection 2, it says, in case the explanation is found acceptable, the registered person shall be informed accordingly and no further action shall be taken in this regard. So the officer has issued a notice in form ASMT 10 giving the discrepancy. The assessee is provided an opportunity to reply in form ASMT 11. What the assessee can do in form ASMT 11 is he can give a valid explanation for the discrepancy that has been pointed out. If the explanation given by the assessee is accepted by the proper officer, then the entire assessment proceedings under 61 comes to a close by way of the proper officer issuing something called as form ASMT 12. Form ASMT 12, kindly note, is an order where the proper officer accepts the reply filed by the assessee and then closes the assessment. It can so happen, it more often than not happens, that the assessee files the reply in form ASMT 11, but the proper officer is not going to accept that reply, as in it is not a satisfactory explanation for the proper officer. Then the question is, does section 61 empower the proper officer to issue an order confirming demand and issuing a order crystallizing the liabilities of tax, interest and penalty? Answer for this is would become evident from subsection 3. I'll just read subsection 3 for all of you. In case no satisfactory explanation, that is, the proper officer is not acceptable to my explanation. So in case no satisfactory explanation is furnished within a period of 30 days of being informed by the proper officer, so I have to give a reply within 30 days, or such further period, the proper officer gives you an extension, or where the registered person, after accepting the discrepancy, fails to take corrective measure. This is a case where discrepancy is pointed out. I don't give an explanation with respect assailing the discrepancy, but I admit the discrepancy. After admitting the discrepancy, I must pay the tax or interest in the month in which I have, or in the return for the month in which I have admitted the discrepancy. I have to pay the tax plus interest or penalty in some cases in the return for the month in which I have admitted. What happens if I don't pay? That is what he's saying. That is, fails to take corrective measures after accepting the discrepancy, fails to take corrective measure in the return for the month in which discrepancy is accepted, proper officer may initiate appropriate action. It did not say proper officer may issue a order. It did not say proper officer may close the proceedings and confirm the demand. No, it says initiate appropriate action. What do you mean by initiate? It means start appropriate action, including those 65, 66, 67, said interest, and I'll tell you what those are. So what scrutiny return does is it does not enable the proper officer to confirm demands, but all it does is it enables the proper officer to take further action by way of one, departmental audit under section 65, or initiating special audit 66, or initiating search investigation under section 67, or issuing a notice under section 73 or 74 as the case may be. But 67 can never lead to confirmation of demands or reversal of input tax credit. It can only lead to further initiation of proceedings to start the adjudication procedure for recovering the demands or reversing the input tax credit as the case may be. I hope you paid attention to the last portion. There are many orders which have said you have now got to pay tax, interest and penalty. Absolutely not. He can only start one. So this was about scrutiny of returns. I think the whatever I just told in the previous slide is given in the form of this explanation here. So I've explained this slide. Let's proceed further. Next, let's get into provisional assessment. Yes. Section 60 of the CGST Act deals with provisional assessment. Provisional assessment can be resorted only in two cases, that is valuation and classification. Kindly note, classification will not only include determining the rate of tax from 5, 18 and 28. Classification inter alia essentially includes whether I am eligible for exemption under 2 of 17 for goods as amended and 12 or 17 for services as amended, or whether I'm liable for the 5%, 12%, 18%. So classification includes exemption also. As far as the valuation is concerned, there can also be cases where I am not able to ascertain the value of the goods. Look at cases where I have supplied goods to related parties. So therefore, I need to find out what is the open market value. Cases where the consideration is in terms of barter. So I need to find out what is the open market value of the cross supplies. Consideration where the consideration is in non-monetary terms, where the consideration is in the form of an act or abstinence of the assessee, or where considerations are coming from a third party. or where additions as required under 15 subsection 2 have to be added, which cannot be quantified immediately, or importantly, discounts under 15 subsection 3. I am not able to quantify the discount at present. 15 subsection 3 says on bill discounts, and second one is a case where the agreement for providing the discount is entered at the time of supply, and then the discounts are issued at a later point in time. So the discount could be on the basis of threshold of sales made. Of course, you will have to make an investigation. As chartered accountants, we will have to make an investigation as to those discounts are really discounts, or whether those discounts are actually in the nature of incentives, wherein incentives is a supply of service by the recipient to the manufacturer or to the dealer. And if those have been given in the form of discounts, then definitely that cannot be reduced under 15.3, but have to be separately determined as a separate supply of service from the recipient to the supplier of goods. But as I told you, there can be huge amounts of issues relating to classification and valuation. So where there are issues related to classification and valuation, authority for advanced ruling is not the only option that is there. You can also have a parallel process in assessment. But please note, apart from valuation and classification, you cannot go into anything else for provisional assessment. That's point number one. Point number two, this is a legacy provision which has been brought in from central excise provisions. I just take one examples relating to classification and then proceed further. I've taken a classification issue from authority for advanced ruling, and there is a good reason for me to take this as an example. What happened in this case was the contract for provision of service was that the service provider had to extract sand from the reach, that is basically your river banks of the river, had to then after extracting, move it on a ramp, and then had to load it onto a river. So it had to construct roads for approach roads from the road to the river bank. It had to construct ramps for movement of this sand. Then it had to load this sand onto the tipper. Then the tipper had to transport the sand to the stockyard. At the stockyard, the sand had to be unloaded. Then the sand had to be stored at the stockyard. And after that, when any customer comes, the sand had to be reloaded onto the customer's lorries, and then the reloaded sand had to be transported to the customer's premises. So the question was, in this case, what service are we providing? Are we providing excavation services, land excavation services? Are we providing works contract service in the form of construction of roads? Are we providing loading, unloading services? Are we providing transportation of goods by road service because the sand is being moved? Are we providing storage and warehousing services? Admittedly, we are providing a bouquet of these services. So whether this is a composite supply or a mixed supply, if it is a composite supply, what is the principal supply? If it is not a composite supply, is it a mixed supply? So all these questions came out from this particular question with the authority for advanced rulings. The reason I took this particular example was the member state and the member central, both were not able to come to a conclusion as to what it was, as to what kind of service it is. What sorry, one member said that this is a excavation service, this is extraction of sand, that is the substance of the transaction, while the other member was of the view that the substance of the transaction was transportation of goods by road. So both of them were agreeable that it's a composite supply, but there was a disagreement as to what was a principal supply. So a classification issue which went to the AAR, the AAR itself was unable to classify because of contradicting views. So this then went on to the AAR, Authority for Advanced Ruling, wherein the AAR held that the substance of this transaction or the principal supply in this composite supply of services was transportation of goods by road, and that the excavation of services was a service which was a prefix to the transportation of goods. That is the first point. The second point is the assessee gave the bifurcation as to the costing of each leg of the service. Loading is 30, transportation is 32.5, then again stocking is 30, and again formation of ramp is 7.5. The important point which the AAR came out was that while costing is determinative of the nature of service, I repeat, while costing of the different transactions are determinative or are pointers to the classification of service, they are not conclusive. I repeat, they are not conclusive of the classification. The conclusion, the conclusiveness of the classification has to come out from what is the consensus ad idem between the parties, and not on the basis of what is costing more, what part of the service is costing more. So I feel this was one of the rules of classification which was there before also, which was brought out here also, and so therefore I thought I'll share it with all of you. This is the first point. The second point, what is the time period within which provisional assessment must be approved? So if it is a classification issue or a validation issue, then the proper officer has to compulsorily allow the provisional assessment. The time period within which the provisional assessment has to be made is within 90 days from the day the application has been made for provisional assessment. Application is made in ASMT 1. Thereafter, if the assessing officer wants any further information, he can issue a notice under ASMT 2. The reply will be given in the form of ASMT 3, and the provisional assessment order is given in the form of ASMT 4. This has to be done in 90 days from the date of the application date. Next provision says, 60 subsection 2 says that for any provisional assessment, the person making the application has to give a bond and a security. What is there? There is a difference between bond and security. Bond is the undertaking that is given by the assessor applying for provisional assessment. The bond is going to be for the differential amount of tax. The differential amount of tax is going to be your CGST, SGST, UDGST, IGST, and compensation cess. While the bond is undertaken, or is obligation is given for the entire differential amount, the security has to be furnished in the form of a bank guarantee, and the provision and the rules state that the security, maximum amount of security shall be 25% of the bond amount. So the maximum amount of bank guarantee is going to be 25% of the differential taxes. Finally, within what period should the final assessment order be passed? The provision says that the final assessment order has to be passed by the proper officer within 6 months from the date of communication of the provisional assessment order. I repeat, within 6 months from the date of communication of the provisional from the date of passing of the provisional assessment order. What happens if he is not able to pass the final assessment order within 6 months? You can ask for an extension. You have to give the reasons. After recording you have to give an application to the JC or the ADC, as the JC is Joint Commissioner, ADC is Additional Commissioner. An application has to be made. Reasons have to be given. After recording the reasons, the JC or ADC can further extend the time for another 6 months. Even 6 months plus 6 months, you are not able to come. Then you have to make an application to the commissioner. The commissioner will then make an extension. The maximum extension that the commissioner can give is 4 years. So a total of 6 plus 6 months plus 6 months plus 4 years. A total of 5 years. The reason it is capped at 5 years is because the demand can be made under section 74 for a period, maximum period is 5 years under 74. Of course, it is 5 years from the due date for annual return. Over here, it is 5 years from the date the provisional assessment has been passed. This is the time period. The next question is, would interest be payable if the tax is payable on final assessment? Let me give you an example. The provisional assessment order stated that you supply the goods provisionally at the rate of 12%. However, the final assessment order stated that the goods is liable for tax at the rate of 18%, which means there is a differential tax payable of 6%. So whether the interest is payable on the 6%, the answer is yes, interest is payable on the 6%, but from which date is it payable? It is payable from the due date the returns were due date on which the tax had to be paid under 39 subsection 7. So therefore, it is not, the interest is not payable from the date the final assessment order is paid, is issued, saying that the differential tax of 6% is to be paid, but the interest is to be paid from the due date the taxes had to be paid under 39.7. The due date for taxes under 39.7 is for January, the due date is February 20th. So it is from the due date the taxes had to be paid and not from the date the final assessment order has been passed. Why this is so important is because if you look at the case law, their commissioner was a CET Limited. As I told you, this is a legacy provision from the Central Excise. In Central Excise, the Supreme Court said, look, the assessor does not know that there is a short payment of tax till you issue the final assessment order. So therefore, there can be no question of paying interest prior to issue of final assessment order, and interest has to be quantified only from the date the final. So to overcome the Supreme Court decision, the provision has now been made saying that it is from due date of 39 subsection 7. Fair enough, the legislation can always pass provisions to overcome a Supreme Court decision until and unless it is violative of Article 14 and 19(1)(g). It would not be a problem, and it is not violative in this case. So this is point number 1. Point number 2, what happens in the opposite case? The opposite case is, look at a case where the provisional assessment order has been passed for 18%, and then the final assessment order says that the tax payable is 12%. Question number 1, whether the 6% tax refund is automatic. Answer is no, it is not automatic. You have to make a application for refund of the provisionally assessed tax. Point number 2. Point number 3, the application for this refund has to be made within 2 years from the date of passing of this final assessment order. This comes out from section 54, point number 3. Point number 4, I am the supplier. I collected 18% from all my customers and I remitted 18% to the government. What happened was, final assessment order said that it is only at the rate of 12%. So therefore, as a supplier, can I claim the 6% refund from the government? The answer is no. I can't claim the refund of 6% because it will not unjust enrichment. I have collected 18% and paid 18%. If I get a refund of 6%, then there's an unjust enrichment of 6% for me. So I can't apply for refund. If I apply for refund as a supplier having collected from my customers, refund will be granted, but will be credited to the consumer welfare fund. So the next question is, can my customers who may be unregistered persons, can they apply for a refund? Because they are the persons who paid the tax at the rate of 18%, from whom I collected paid to government. Answer is yes. It is not necessary that only a registered person must apply for a refund. If you look at 54 subsection 1, it says any person. So even an unregistered person can apply for a refund, and if they're able to demonstrate that they are the persons who have borne the 6% differential tax, they can claim that refund. As far as the interest is concerned, if you looked at interest in the previous case, that is, there was a short payment of tax, then the interest was payable from due date under 39 subsection 7. But in the case of refund, interest is payable if the refund is not given within 60 days from the day I have applied for the refund. So first the final assessment order is passed, then I have to apply for refund. After I apply for refund, the 60 days has to lapse, and if the refund is not given within 60 days, then the interest is payable by the department from the 61st day, whereas we have to give interest to the department from the due date. That is point number, whatever point it is. As far as the interest is concerned, for short payment of tax, we have to pay interest at the rate of 18% to the government from the due date the taxes were liable to be paid. But the government is going to give us interest on this taxes on the refund at the rate of only 9%. So this is as far as the provisional assessment was concerned. The various forms that is there, procedural, I'll proceed further. Okay, it's 12:15. Okay, let's get into summary assessment. 64. Look at 64. It says the proper officer may, on any evidence showing tax liability. Let me stop there. What is the meaning of the term evidence showing tax liability? What is the meaning of the term evidence? Consider this following term: conjuncture, surmise. I have a conjuncture or surmise that there is a tax liability. I have a suspicion. Above conjuncture and surmises, there is a suspicion. Above suspicion, there is reason to believe. Above reason to believe, there is evidence. So what are the differences between all these things? Conjuncture and surmise means it is a fiction. It is a free flow of my thought. Absolutely not backed by anything. It's totally incorrect, totally false. That is a conjuncture and a surmise. Above that, you have suspicion. In case of suspicion, may or may not come out to be true. It may be, in case of a suspicion of a tax liability may ensue, a tax liability may not ensue also. Above this, you have reason to believe. Reason to believe is a case where you are no longer under the suspicion category. You know that tax liability is payable, but you don't have proof to discharge the burden of your reason to believe. You are not even able to quantify the tax liability. You have a very good reason to believe, but beyond the fact that you know that he has to pay tax, you have absolutely no idea. You absolutely have no proof as to how much tax he has to pay, what tax he has to pay, whether he is eligible for any exemptions, whether he is eligible for any input tax credit, and so forth. Above this, you have evidence. Evidence is a case where the reason to believe is backed by proof, which and the burden of the evidence is discharged, saying this is the tax liability. These are the cases where the taxes have not been paid. This is the rate of tax to be paid. This is the actual supply that has happened. To these persons, the supplies have been made. This is the rate at which the tax has to be paid. This is the time at which the taxes became payable. This is the interest on which you have to pay the taxes. This is the vehicle in which you send the goods. This is the e-way bill which you have used for sending the goods. This is the invoice, or in certain cases, a dummy invoice which you have used for sending the goods. This is the parallel e-way bill which you have used twice to send one particular goods. So these are the various evidences. The burden of proof is being discharged by this evidence. So that is the meaning of the term evidence. So whenever a summary assessment is passed, the Act requires that the highest level of credibility has been attained and passed before you can make a summary assessment order. The highest level of credibility that there exists a tax liability comes out from the word evidence. So the proper officer must have an evidence, what I told you, showing the tax liability of a person coming to his notice. I may have made a supply to a person, but the department may say that yes, you have made a supply to the person, but that supply may be a job work under 143, and so therefore the supply may not be liable to GST. The supply I have made may be exempt, and so therefore I have not paid GST. The supply is on seller approval basis, so therefore he has not yet approved. 6 months passed, so therefore the seller approval has not passed. So therefore the liability is not there. So there can be so many attendant factors wherein I may have made a removal, but tax liability may not have been crystallized. Or it could be an in-bond sale. In-bond sale is neither a supply of goods nor a supply of service. It could be a mercanting trade. It is a purchase sale, but it's not a supply because it falls under schedule number 3. So my transactions may be or the consideration I have received is in the form of reimbursement. So therefore it is a pure agent transaction. Therefore it is not liable for GST. Or it is a supply made between principal to third party. The goods have not gone to the agent. So therefore there is no supply from principal to agent. It is only because goods have not gone to principal, agent. There can be so many reasons why the knowledge of the department may be incomplete or downright incorrect. Therefore, the evidence that the department has to be crystal clear, and the facts have to match the preponderance of the revenue that is the basis on which the revenue is acting must match to the facts of the case. I'm talking so much about these things because this is a case where the department is making the assessment, not the assessee, and at the total absence of the assessee, as you will get to know for. So therefore, evidence showing a tax liability that must of a person that must come to the notice of the proper officer. If it comes to not of proper officer, just because it comes, he cannot pass a summary assessment order. If this evidence comes to liability, he must take this evidence to his higher ups, that is to the JC or the ADC. The reason the provision gives this is there must be a pre-check, another set of eyes must have a look at the evidence, and the other set of eyes must tick off saying that yes, what documents, what circumstantial evidence, what seizures you have looked at, what documents you have are correct. That the higher up, the other person must give a unbiased view. At least that is what the act requires. Must give an unbiased view. Must that yes, what the proper officer is saying, what the evidence that is being brought out by the proper officer is correct, and he must give a order to the proper officer to proceed further. Of course, this is not coming out from the provision, but there must be internal records of the JC or ADC approving the proper officer to go ahead with this evidence. If there is no internal documentation of this, then the proof of this cannot be shown by the department, and if the proof of this cannot be shown by the department, this entire summary assessment proceedings will fall. So therefore, the must give a previous permission. After receiving the previous permission of the JC or ADC, the proper officer will then proceed to assess the tax liability of such person. What? Why is he proceeding to assess the tax liability? Most important, to protect the interest of the revenue. So the sole reason why the department is proceeding to assess the tax liability instead of the assessee, more importantly, at the back of the assessee, behind the back of the assessee, is to protect the interest of the revenue. That is, the department ought to have conclusive apprehensions. I wouldn't even say apprehensions. The department must have conclusive reasons to believe that the assessee is going to flee from the country, the assessee is going to alienate the assets, the assessee is going to destroy the evidences, the assessee is going to suppress the transactions in such a way that the evidences are not going to come forward, or the transactions cannot be brought forward, and therefore ought to act now. That time is the essence, and or the audit procedure or the investigation search seizure procedure which is there under 67 has to be short circuited because of the interest of the revenue, and if it is not short circuited, then the evidence is going to be destroyed. Once the assessee is able to, once the department has to demonstrate these facts, then and then only it can get into summary assessment order. I'll tell you why so much of, if you have paid attention, I've given so much of prerequisites that is required before a summary assessment order can be passed. I'll tell you why, because it comes at the end of the order. Protect the interest of revenue and issue an assessment order. So this is a case where no show cause, no personal hearing, no time for filing reply, no principles of equity, no principles of justice, no audio alterum partem, no hearing the other person. I am the judge and jury of my own order, because he is directly passing the assessment order. Once an assessment order is passed, the liability gets crystallized. Once the liability gets crystallized, you can proceed with recovery under section 79. Further, if the proceedings is pending under section 64, you can get into provisional attachment. That is, if assessment is pending, once the assessment order is passed, then the assessment is no longer pending, so you can't make a provisional attachment. So when before passing the assessment order, you can get into provisional attachment. I think that is section 78, if I'm not wrong. is a proposition to provisional attachment. So if provisional attachment has not been made, then you can pass assessment order. After making provisional attachment, you can also pass a assessment order. Once assessment order has been passed, your tax, interest, penalty, late fee, fine, fine in lieu of penalty, all your composition fine, everything gets crystallized. Once it is crystallized, the only option you have got, one of the option you've got is a appeal. So important point is the liability gets crystallized. Because the liability gets crystallized without giving any opportunity whatsoever to the assessee, and it is being done, keeping the time in the essence, therefore all the checks that I told you, if you have sufficient grounds to believe that any delay in doing so may adversely affect the interest of revenue. What is delay in doing so? Following the adjudication proceedings under 73 and 74, following the audit proceedings under 65, 66, following the investigation proceedings under 67, thereafter following the summons proceedings, thereafter following the notice proceedings. So all this has been short-circuited because delay in doing so may adversely affect the interest of. If that is the case, then a summary assessment order will come. Dear members, the reason I gave you all these points is all these points must come through in the summary assessment order which has been passed by the proper officer. If any of what I told you does not come across in the assessment summary assessment order, my view is that such a summary is void ab initio because it fails to meet the high standards which have been given under section 64. So this is a short point on summary of 64. Told you previous mentioned JCADC, principal national justice not to be followed. Whether a person other than the owner can be assessed under this provision. Yes, a person other than the owner also can be assessed in the summary order. The persons other than the owner is the transporter and the warehouse keeper. Where the proper officer intercepts the transporter and the transporter is unable to state who the owner is. Where the proper officer inspects the warehouse and in the warehouse keeper is unable to state to whom the goods belong, which he is storing, then it's definitely a sorry state of affairs. Because of this sorry state of affairs, the 64 states that in such a case, the transporter and the warehouse keepers are the persons liable to pay the GST. So other than the owner can be made liable for GST. What are circumstances when a summary assessment order can be withdrawn? So the summary assessment order, when it is passed, will be issued in form ASMT 16 and directly summary of the summary assessment order is given under DRC 07. The importance of giving the summary in DRC 07 is once DRC 07 is given, DRC 07 is a order is an intimation for recovery. DRC 07 is given, there is no need to give further letters for recovery of taxes. The period of 3 months as given under 78 has to be followed and then recovery will start. Proper officer where he has reason to believe that 3 months the assessee may not pay tax can recover before the period of 3 months also, of course with prior notice to the higher ups. But the important point is the assessment order is given under form ASMT 16. The assessment order is now there with the assessee. Once the assessee looks at the assessment order and then he can say that, look, the reason why you have given for the demand of penalty is incorrect because this was work or this was sale on approval basis or this was not a supply at all or this was an exempt supply or whatever is the reason. These reasons has to be put in by the assessee and you can give a reply for the summary assessment order in form ASMT 7. So once the summary assessment order is given, within 30 days, the assessee can reply back to the summary assessment order in form ASMT 17. The JC or the ADC will look at the reply given by the assessee in form ASMT 17, and if the reply is found to be proper and is acceptable, then he is going to set aside the assessment order passed under ASMT 16, or he can set aside the assessment order and passed under ASMT 16 suo motu also. Wherever the summary assessment order passed under 16 ASMT 16 is set aside either on the basis of reply by the assessee or suo motu also by JC ADC, it does not mean it is the end of the case. No, not at all. In all the cases of summary assessment, it will follow by way of an issue of a show cause notice either under 73 or under section 74. What happens if the JCADC does not suo motu withdraw the summary assessment order, or the application of the assessee is rejected? Then the one of the way in which it can be assailed is by filing an appeal under section 107. By filing an appeal, of course, within the period of 3 months plus extension period, and paying a pre-deposit of 10%. I must acknowledge Srimati Annapurna Madam, who actually, while discussing this summary assessments yesterday, said that there is another manner in which you can assail the summary assessment order. I did not know this, and I thank her. She told me about this yesterday. It seems there is a provision under 161, which provision was there under the VAT laws, but such a provision was not there under central indirect taxes, where there is a mistake apparent on record. Then the mistake apparent on record can be rectified by way of section 161 also. That is point number 1. Point number 2, wherever it is a clerical mistake, the mistake apparent record can be rectified, whatever the time period. But if it's other than clerical mistake, it must be rectified within a period of 3 months. It cannot be rectified beyond a period of 6 months. This is point number 1. Point number 2, the question is, I filed an mistake apparent in record. I filed an order, I filed an application, but the application gets rejected. We need to keep in mind that this entire thing happens within a period of 3 months, because in case I filed an application for mistake apparent on record and that is not rectified, and period of 3 months passes, then my appeal period under section 107 can lapse. At least that is what the department is going to argue. We will argue that the time period of 3 months starts from the new order, that is the rejection order, but department can always say that the appeal time limit gets over. So this has to be kept in mind as far as summary assessment orders are concerned. Lastly, we will get into best judgment orders. Okay, as far as best judgment orders, I still remember very nicely. This was our CA final time. 2006, Vijayaraja sir was taking the class, and this was some Vijayaraja sir told us during the audit class. At the time of your audit, we say that at the time of audit function, we say that it is to the best of my information and knowledge. That is how we sign. It is to the best of my information and knowledge. Only thing is, please don't ask me what my information and knowledge is. Please don't ask me what my information and knowledge is. The best of my information and knowledge. That should not be the case. Unfortunately, that is the case when department makes best judgment orders. They will pass best judgment assessment orders. Please don't ask what is their best judgment. Because I'll tell you how I have the example of best judgment order that we came across, wherein what the department did was it simply took the income side of the P&L. The total of the income side, it said, is liable for GST. it did not find out whether the income side had got any incomes which are not liable for GST, whether it had got any exempt incomes, whether it had got any incomes which were, not a supply under Schedule 3. It doesn't do anything of such sort. It will simply go forward and bring the entire amount to tax. Sometimes your best judgment assessment orders can be in the form of your income tax returns. It can be on the form on the basis of your form 26AS assessment orders. And your best judgment assessment orders will not have any input tax credit at all. I'll tell you the reason why it may not have input tax credit. So never let the never bring it to a situation where best judgment assessment orders have to be passed. Now, best judgment orders are of two types. One is for non-filers, that is people who have registered but not filed. Other one is people who have not registered at all. So look at the case where they have registered but not filed. Look at the provision. It says notwithstanding anything contained contrary to 73 and 74. Notwithstanding means it's a non-obstante clause. Non-obstante clause means it is overriding. What is it overriding? It's overriding section 73 and 74. What is it trying to override section 73 and 74? Let's try and look at it further. Where a registered person fails to furnish the return. Pay attention over here. Non-filers, the best judgment is being done for registered persons, and for registered persons who has failed to furnish a return under 39. Failed to furnish return under 39 is your 3B, or failed to furnish return under 45. 45 is something called as annual return, and 45 is something called as a final return. Final return is a return which has to be filed after the registration has been cancelled or after I have applied for cancellation of the registration within 3 months. This final return has to be passed under 45. Please note, the best judgment does not talk of failure to furnish return under 44. Under 44, we will file annual return. So if there is a failure to furnish annual return, there cannot be a best judgment for the annual return, because failure to furnish only 39 and 49 only is there under best judgment. So failure to furnish 3B under 39 or a final return under 45, after service of a notice under 46. So what happens is, where a 3B is not filed or where a final return is not filed, a notice is issued in 3A asking the assessee to file the 3B or final return within 15 days from the date of giving the notice under section 46 in 3A. If even after receiving the notice in 3A asking me to file the return in 15 days, I have not filed it, then the best judgment assessment can be done for the 3B or 3B under 39 or for the final return under 45. The proper officer may proceed to assess the tax liability of the said person to the best of his judgment, taking into account all relevant material which is available. So the relevant material which is available with him could be the balance sheet, profit and loss account, 26AS, ITR return filed, your tax audit report, CARO report, any other information, or some invoices which he has found out from other investigations on the basis of 2As which other people have claimed. So all the relevant material which is available or which he has gathered, and issue an assessment order within a period of 5 years from the date specified under section 44. Under section 44, you have a time limit for filing the annual. Under section 44, you file annual return. The annual return due date is 31st December of the at the end of the subsequent year. 17-18, the annual return was 31st December 18. However, the annual return for 17-18 is now extended for 31st January 2020. So for 17-18 is 31st January 2020 is the due date for filing annual return under 44. So best judgment can be done latest by 31st January 2025. And look at a case where if the best judgment is done in 31st January 2025, the time limit for taking the input tax credit has already expired on 31st March 2019. So if a best judgment assessment order is done on the output side, I'm liable to pay the tax. Whereas on the input side, because of 16.4, the limitation has effect, and I'm not able to take the input tax credit. So it's a double whammy. I don't take input tax credit, but I'm liable to pay tax on my output side. Therefore, be careful. Never let a assessment get out of hand and into misjudgment, because first of all, he's going to bring anything and everything under the sun to tax. And second, you're not even going to get the legitimate input tax credit, not because it is not used in business, but because of the operation of time limit under 16.4. So this is about best judgment orders for non-filers. It overrides 73 and 74. It is applicable for people who fail to furnish 3B under 39 and final return under 45. Even after service of notice under 46, notice under 46 is under 3A. Time limit given is 15 days. Past best judgment order, limitation period, I have told you, 5 years. If the best judgment assessment order is not passed for 1780 by 31st January 2025, then if it is passed on 1st of February 2025, then the entire order becomes infructuous because of limitation period. How to overcome best judgment assessment order? Say this best judgment assessment order for 1780 is now passed. We have already found out so many cases where best judgment assessment order has been passed for non-filers. Way to overcome this is, the provision itself says, way to overcome this is, you have to file a valid return within 30 days from the day the best judgment assessment order is passed. If you file a valid return within 30 days the best judgment assessment order is passed, the best judgment assessment order is deemed to be automatically withdrawn. Pay attention, valid return doesn't mean nil return. Just to overcome best judgment assessment order, if you file a nil return, when in fact you really have taxable supplies, it will tantamount to suppression, because you have supplies in books of accounts, it is showing sales in books of accounts, but you have filed a valid return showing nil return just to get out best judgment assessment order by paying zero tax. So, to suppression, look at explanation below 74 subsection 12. Deliberate case of not declaring value of supplies. So therefore, it may be subject to 74. Penalties under 74 important. So be careful. File the proper valid return. Valid return means you have to pay the taxes also. What about liability for interest? Full interest is payable at the rate of 18%. Full late fee is payable. This is as far as non-filers is concerned. Next, let us come to unregistered persons. Best judgment for unregistered persons. Again, it starts out the same way, not saying anything contained in 73 and 74. When a taxable person, look at the difference. For non-filers, it was a registered person. For a unregistered person, it is taxable person. What do you mean by taxable person? Taxable person means a person who is liable for, who is registered himself under section 25 or liable for registration under 22 or 24. So, one, you have already registered under 25, or in cases where you are liable under 22, that is your aggregate turnover crossed 20 lakhs, but you are registered, or the 20 lakh rupees turnover was not applicable to you at all. You are liable for paying tax under 24 from rupee 1. So, you have not obtained registration. So, that is a taxable person who fails to obtain registration, even though liable to do so. Or this is the first category of person, or the second category of person whose registration was cancelled under 29 subsection 2. So this is a case where I have registered, but my, what are the cases where registration can be cancelled under 29 subsection 2? 1, I have not filed a return for 6 consecutive months if I'm a normal taxable person. I have not filed my return for 3 consecutive tax quarters if it is a composition dealer. I have obtained my registration by way of a fraud or a misrepresentation. I have contravened the provisions of GST law, or I have obtained registration but not started business in a period of 6 months from the day I've taken registration. In all these cases, the registration can be cancelled. After the registration is cancelled, then the proper officer comes to know that tax liability was payable. So then he will use this particular provision, because you have cancelled for him not filing, and then he finds that he has cancelled the registration, but he is liable for tax. So he will come to this provision. But who was cancelled and went into but was liable to pay tax, proper officer will proceed to assess the tax liability to the best of his judgment for the relevant tax period, issue the assessment order within a period of 5 years from the due date of 44. I have told you what it is, for furnishing the return. So all the limitation period is absolutely identical to non-filers. This is as far as people have not registered. The important point, members, is that for non-filers, a previous notice was issued under Section 46. So therefore, for non-filers, there is no another notice given, and a direct assessment order is passed under ASMT 13. But for unregistered person, because a previous notice under Section 46 was not given, therefore, though the Act does not give it, the rules state that a notice has to be issued in form ASMT 14, reply has to be taken, the reply has to be considered, and then a final assessment, best judgment assessment order has to be issued in form ASMT 15, confirming the demand after considering the replies. So this is the best judgment order for unregistered persons. How to tackle this? One is file an appeal. Necessary that only registered persons can file appeal. Even unregistered persons can file an appeal. If there is a clerical mistake, definitely you have 161. Definitely you have an opportunity for hearing. For unregistered persons, you have an opportunity to file the reply also in written submissions, which has to be considered. So this is as far as best judgment for people who have unregistered. So thank you. I have come to an end of my session. All my members who have taken the time out and listened to me for this 2 hours. Hope it's worth it. Thank you, and happy Gauri Ganesha to all of you. Thank you.
Taking us through this vast topic of assessment and
just one second. Technical support, could you please help me how to get this? Okay, stop share. 1 second. I'm ready for questions if there are any questions at all.
Yes, sir. We have a few questions. I'll take one after the other. So the first one is Section 39 actually the.
1 second, sir. Can I have a look at this under the questions, question and answers?
Yes, sir. It is there.
Which one should I look at? Chat, is it?
Reading it out, or you want to see?
Yeah, please. Yes, sir. You can please read out, sir.
Yeah. Can filing of Gstr 1 be considered as self-assessment, and hence the recovery proceedings can start, or should we understand the self-assessment as self-assessment made in Gstr 3B?
Filing under 3B is the necessary for self-assessment made. Gstr 1 is merely a statement of outward supply. So therefore, self-assessment and recovery can happen only after 3B has been filed and not basis of Gstr 1.
Yes, sir. So if that be the case, then technically there could not be any situation because 3B will be filed only after paying of taxes. So will there be a situation wherein the taxes are declared and not paid in 3B?
Yeah, it's a case where you have uploaded the GSTR 3B, you have saved it, but you don't have the money, so you have not paid the money, or input as credit is less, so you have not been able to fully set it off. So you have not filed the return by using the DSC or EVC. So it's a case where I have myself uploaded my tax liability, admitted it, but not paid it.
And the next question, sir, what is the legal validity of the emails and letters we keep
Could you
receiving?
please speak up loudly? I'm not able to listen to you also. Yeah.
What is the legal validity of the emails and letters that the assessees are receiving, calling for reconciliation between GSTR 3B and GSTR 1 when it comes to output tax, and GSTR 2A and 3B when it comes to input tax?
Okay, the legal validity of emails is that if the email has a DIN number in it, and then whether it is whatever is the discrepancy is given in the form of attachment as a scanned copy, or it is directly given in the email, then you have to reply to it. If it is not got a DIN, the finance minister has told that you can throw it to the dustbin. Please don't throw it to the dustbin. Please act upon it.
But is the DIN process adopted even by the state government, sir? Because as we see, all the notices that we are getting from the state offices, we are not getting any DIN. We are getting the DIN only for the central notices.
No, sir, even I have not come across from the state government. So if you have any emails from the state government, then the section number, but under the GST, I don't recall the section number. GST. It says a service by way of electronic media is also a valid service. So please consider it as a valid service. Please don't wait only for the hard copy. So answer is yes. Please go ahead and reply.
Yeah. And the next question, sir, is on calculating the time limit. So we have time limits of 3 years and 5 years for computing the period of limitation. In that instance, let's say for financial year 17-18, the annual return is filed on 31st December 2019. So will the 3 years count from 31st December 2019 or the next day?
My understanding is for 17-18, the annual return is 31st January 2020. Assuming it is 31st December 2019, the 5 years or 3 years will start from 31st December 19 and not from due date of 31st December 18, because specifically the amendment has been made.
Correct, sir. No, the query is whether it should, the 3 years or 5 years should start from the very day or the next day, because the Limitation Act gives reference to the next day. So what exactly should be the interpretation that we have to take here?
Take it from the next day.
Next day.
You take it from the next day, not an issue, because the next day will start and will end 1 day prior.
That's right. Okay. Provisional assessment versus AR, which would be a better
provisional assessment versus
classification versus advanced ruling, which is a better option to understand the classification and rate of tax.
Look, in both the cases, it is the departmental officials only who are sitting in front of you. For AAR, there is a decision of the Bombay High Court in Jindal case, wherein AAR decision was against me. I went to AAR. AAR decision was against me. I went to High Court. High Court said, you cannot come in appeal at all because there is no provision for going in appeal against AAR. So the AAR decision sticks. The only point in that case was they said procedure has not been followed and remanded back. But the fact is, you have a decision of the High Court which says that the AAR decision will stick. At least by going in provisional assessment, you will have a commissioner final assessment, then commissioner appeals, then tribunal, then High Court, and then at least the High Court will look at the matter. For AAR, the High Court will say, I don't even want to look at the matter. I will not go on the merits at all. Of course, before I conclude, it is a one-off decision. For all the AAR decisions under the erstwhile law, we would always file writ petitions and it has always been accepted. Unfortunate Bombay High Court decision.
The next question, sir. Issue of notice under section 61 for GSTR 2A and 3B mismatch. To what extent can we, is this valid? Because GSTR 2A is not a return.
Yes. Two-front answer. If you want to go by our institute, in the background material of our institute, they say you can verify 2A and 3B. It falls within the meaning of discrepancy. But my understanding, discrepancy must come out of the return. So therefore, one return I have shown output tax, I have taken input tax credit, then you can go on this. As far as 2A is concerned, it is not a return furnished by me. 2A is a collateral statement by the GST. GSTR 2 would have been a return that ought to have been furnished by me. They never brought that into existence. So therefore, because 2 was a return furnished by me, they could have done a discrepancy of 2 and 3B. Having said this, give this as the first line of your reply. However, in the second line of reply, don't stop your reply there. In your second line of reply, please go ahead and reconcile the differences, and where the 3B credit is more than 2A, get a certificate from the customers who have not uploaded to a manual certificate from the customers who have not uploaded that they have paid the taxes. Because even if you stop the proceedings under 61, the same proceedings can be started. If it's proceedings started on 65, then you have no other issue. You have no other option there. So better to give effective reply rather than give technical answers.
Sir, next question is with respect to the current ongoing departmental audits. They are insisting on confirming whether the taxes are paid by the supplier, though the entries are reflecting in GSTR 2A. So, is this a valid query that they can ask?
Definitely not. As a expected to look into my vendor's books of accounts and determine from my vendor's books of accounts whether taxes have been paid. Look at his bank statements, look at his 3B returns, and determine whether he has paid the taxes. They are confidential information. That is point number 1. Point number 2 that is required is 16(2)(c) says that there is a requirement for the vendor to have paid the taxes before I have taken the credit. So we will have to, this is my view, there is a totally contrary view to this by my seniors, and correctly at that. But the reasonings for my view is that of the jurisprudence that is laid down by the Delhi High Court, wherein it says the fact that the vendor has paid the taxes must be read down to mean only those vendors wherein you are interacting with vendors who are not bona fide. If they are mala fide vendors, then yes, you need to look at those vendors. But if they are bona fide vendors and you don't have reason to believe that they have not paid it, you can't go in and keep looking at the fact whether they have paid the taxes or not. So they brought a distinction of class of vendors, and they say if the class of vendors are by and large tax compliant, and I have interacted with those vendors, this provision will not be pressed into service. But if I have made supplies from vendors who have the history of not paying tax before, and then I have not taken the care to see that he has paid the taxes, then this provision will apply. Before I proceed further, it is but just that I also give the contrary view, and there is a lot of water to the contrary view. Especially this was told to be by Jatin sir, wherein the point that Jatin sir said was, you are very, very careful while taking credit, but you want to be lackadaisical when you want to find out whether that person has paid the taxes or not. Such kind of, heads I win, tails you lose is not something that the government will look upon nicely. Notwithstanding that, now because section 43A has been brought into effect, in cases where they have not paid, the only option that is available for you is go before the High Court and demonstrate. That's all.
Yes. The next question, sir, on import of goods, the foreign supplier gives a separate payment to the importer, which is on account of probable damage of goods in transit. Whether this amount, which is treated as income, will there be a GST levy? The query seems to be on the self-assessment.
Yes, it is going to be liable for GST because this is the nature of liquidated damages. Contractually, he was supposed to provide this much quality and quantity of goods. That quality has not been given. Therefore, he has given you this money. So I am tolerating the act of him not giving me the proper goods, which falls into Schedule 2, tolerating of an act, and would be liable for GST. Yes.
The next question
is service.
Okay.
Case of supply provisions before determining the factor.
Correct. Is Rule 86A valid since it is bypassing all the other provisions, though for a temporary period of 1 year?
This question should have been asked in yesterday's session or in the previous session which Raghuraman sir took, because Raghuraman sir has taken up this matter before the High Court of Karnataka, and the High Court of Karnataka was pleased to grant a stay. Briefly, if you look at this provision, it says the 4 conditions on the basis of which the credit cannot be taken. But importantly, this credit gives a unilateral power to the departmental official to block credit. Any provision which gives a unilateral power to the departmental official without even giving a chance to the assessee to demonstrate the bona fide or the correctness suffers from inherent bias and prejudice. And if you are able to demonstrate that those provisions are not applicable in my case, definitely it will have to be set aside. My view is yes, provision is incorrect for the time being. Only thing is, issue notice has happened. 86A has not yet been stuck down. Still, it has not been stuck down. It is still valid. So as on date, it is valid.
So the next question, let's say after the best judgment assessment, after 30 days, the return is filed. So
after 30 days.
After 30 days, the return is filed. The departmental officers have not got back to us for the differential payment. The correct liability is actually declared. In that case, are we still required to file the appeal?
100% yes, because provision says you have to file the valid return within 30 days. After 30 days, the provision itself is not applicable to you. The best option for you is to file an appeal. Yeah, instead of even going in for mistake.
Yes, sir. Sir, Circular 125 says after filing the refund application, if a deficiency memo is issued, you will have to file the refund application again, and the date of filing it again will be considered as the relevant date for the purpose of seeing whether it is barred by limitation. Is it valid or it reflects the refund application?
My view, this particular provision of the circular does not have any backing of law in the form of rules or the act. Similar applications, when it has come before the High Court or the courts before, the courts have said you must always consider the first application filed as the application for considering the limitation period. And if there are any mistakes, the subsequent application must only be considered as a corrigendum to the first application. So, in these cases, if the time limit period of 2 years is gotten over, then definitely file a writ petition before the High Court. The position as on date, what the High Courts have given is the first return has to be taken. You'll have to assail the circular. Circular is the department's view of the law. It is not the view on the law. The view on the law is the court's view of the law.
Is there any option to write it to the department for explaining about the shortage of funds and seeking time or paying it in installments?
There is a provision for paying taxes on installments under Section 80, but that provision is a case where the order has been issued. Ours is a case where we are, it is not a case where notice is issued and then, adjudication is followed and then order is issued. Ours is a case where for self-assessment taxes itself, we are not able to pay it in time. There is no provision in law to, do this. And until unless I pay the entire money, I will not be able to file the return. So, no. According to me, no.
Thanks. So these were the questions that we had in the chat. Thank you for addressing all of it, sir. I would formally hand it over to Mukul for the formal vote of thanks. Thank you.
Thank you, Subramanya. Dear members, there is a quick announcement for you. KSEA has planned to conduct the following sessions in the upcoming week. Session Gaps in GST implementation vis-a-vis expectations on industry on 25th of August 2020 by Chartered Accountant Mandar Thelan. And the next session is on GST on immovable properties and liquidated damages on 29th August 2020 by Advocate Sujit Ghosh. Further, I thank further on behalf of I am honored and lucky to have been given the opportunity to present the vote of thanks today. I would like to thank Advocate C.S. Saiprasad for explaining the concepts in such an extraordinary manner. Thank you, sir. I would like to thank our President at KSCAA, C.H. Chandrasekhar Shetty, for being ever supporting and encouraging us to conduct such sessions. I would like to thank C.A. Vijay Patel and C.A. Vinayak Bhatt, members of IT Initiative Committee KSCAA, for their unflinching support in handling all the IT-related requirements for the session. At all the sessions conducted previously, I'd like to make a special mention to our supporter, VIS Networks Private Limited, for helping in setting up the Cisco WebEx webinars. I also like to acknowledge the efforts of C.A. Subramanya BL, member of IDT Committee KSCAA, for moderating today's question and answer session. I finally thank KSCAA for taking up an initiative in organizing such knowledge enriching webinar. Finally, I would like to thank all the attendees for attending today's session and making it a grand success. Before I conclude, I would like to bring to the notice of the attendees that KSAA has planned many other sessions in the future, and all such session details are available on our portal www.kscaa.com. Participants shall be able to refer to today's PPT at the KCAA website for their future reference. Wish you all a very happy and a safe Gauri and Ganesha Chaturthi. Stay home, stay safe. Thank you. Thank you, sir. Yes, sir.
Fine, sir. I would also like to thank Vinayak Bhatt, sir. My laptop was not laptop was working, but the Cisco presentation was not working. Vinayak sir took the trouble from coming home all the way from his home to my home to deliver his wife's laptop, and I am now giving the presentation on his wife's laptop. Thank you, sir. But for him, this would not have gone through. Thank you so much, Vinayak sir.
Thank you, sir. Thank you, Vinayak, once again.